Hey all, welcome back to Share Trek. Today is 6th of December and it's around 4 o'clock. So the markets have just closed and it looks beautiful on the biotech shares that we have been tracking. And I would like to talk about that in this session. And before we proceed, I would like to just remind you that this is my personal opinion and not financial advice. Please consult your financial advisor before doing any investment. Do your own due diligence. Having said that, let's get started. Okay, so let's first start with our indicators. Let's look at VIX. So as we can see here, if I zoom out into the long-term view, we can see that VIX has dropped. The red candle out here shows the action today. So we have been coming down a bit, and that is reflected in the jump in the indices. So the Nasdaq has gained around 9.96 point today. And then you have the Dow going up by 1.9%. And of course, when we go to our favorite sector, which is the CRISPR sector, we have some handsome gains here. Teladoc has gone up 2.54, which will definitely have an impact on the ARC-G fund, which is the next highest gainer at 1.63. So it translates to around almost $1 increase for ARC-G. And then we look at CRISPR, which has gained 1.44, Editas has gained 1.26, Beam has gained 1.34, and Blue has gained 0.6, and Vertex has got 0.61. So having said that, these sessions are going to look more like a market recap than a forecast. And to be honest, it's very, very difficult to predict where the market is going to move. I still hold to my theory that this could be a dead cat bounce, because between Friday and today, I do not see any major changes to the fundamentals in the market. So there is still that interest rate conundrum, the inflation conundrum, and then we have the Omicron going on. And of course, we had the sales report, which was not that great, but it was good for Shopify though, which is a share that we are tracking. But this could be a dead cat bounce where there is a appetite among investors who think that we have reached the bottom and they decide to buy. But I would be very careful. I would like to see consecutive sessions of upward movement before I start investing. And if we look at the levels at which we have the VIX, it's now at around 27.52, whereas I would prefer it to be somewhere around 15.89. But at the same time, we have to understand this very clearly, that as long as the VIX is high, there are deals to be made. Like the share prices are going to be low. But when the VIX comes down, the share prices will be too high. So in a real ideal situation, we should be buying during the time when the VIX is high, and we should be selling at a time when the VIX is low. But it's very difficult to time the market. Like for example, right now, what could happen tomorrow is either VIX could go up or VIX could come down. If it was an ordinary situation where we don't have all these other uncertainties in place, we can definitely look at the other indicators like RSI. It has gone up to overbought and came down. Then we look at MACD, which is bullish. So we would feel that there would be a continued upward momentum, but that's what is the thesis for the dead cat bounce. So let us wait and watch what happens tomorrow, and that will give us some indication on where to go. But if you look at just the biotech, I mean, I'm preaching to the converted actually, but if you look at the biotech sector, the activities that are happening in there, the other day I saw a Novartis video, which I'll try to incorporate in here, which shows very clearly how the CAR T cell can go and attack a cancer cell and kill it. It's amazing technologies, and it's always been ancient wisdom that when you treat an ailment from the root, that is the real treatment. So CRISPR is going to the very root of the disease and conditions that it aims to treat. So all these companies which are using CRISPR technologies and trying to handle diseases at the DNA level, they are going to do very well in the future. During the weekend, Cathy Wood was forced, kind of, in my opinion, to put out a video, stand on what's happening, because ARC-G had lost a lot of value. and she doubled and tripled and quadrupled down on her thesis that she's on the right track with the biotech, with the robotics, and with the AI shares that she's buying, and she's not hesitant to go and buy more. Now let us talk a little bit about ARCG. So ARCG is not a mutual fund, it's a ETF. So what happens in a mutual fund is that the mutual fund holds a bunch of investments according to the plan of the mutual fund, according to the prospectus, and then they try to generate returns, both capital gains as well as dividends, and try to meet the projected returns that they promise to the investors. Whereas with an ETF, the portfolio is separate. They've already monetized it by making share certificate and selling it in the market. So as and when the value of the shares in the portfolio go up or down, it is reflected directly in the ETF prices. Whereas in case of a mutual fund, if the prices go down and if the holder of the mutual fund wants to get their money back, the mutual fund company actually has to sell at a loss to repay the unit holder. That force is not working on ARCG because ARCG is an ETF. So they can do a very, very clear-cut, disciplined portfolio management, and they can take risks within their remit in order to capitalize on the returns. So what ARCG indicates, what Cathy Wood indicated, is that they won't hesitate to buy these shares again when the prices are low, because then it in fact amplifies their projected profitability targets, because they are buying it at a cheap. And when things go bad in the market, everybody runs to the safety of trusted value stocks, which have proved themselves from time and again. These are all established names, and that's the time when all the riskier and unproven stocks feel the biggest pain. Their prices drop sharply. So Cathy Wood kind of mentioned that, in ARCG, whatever shares we have, we believe in them 100%. They are the future. They are the future. They will be like Apple and Tesla of the future. So we wouldn't hesitate buying more. So having said that, right, my personal conviction is that I would definitely buy at the dips. But the main problem is we don't know when is the bottom. So if we don't know when the bottom is, then we are catching what is called as a falling knife, and we get hurt because we buy and it goes down. We buy and it goes down. One of the strategies to handle that is, as I mentioned before, dollar cost averaging. But then after you have finished your budget with the dollar cost averaging, if it still goes down, you feel the pain, right? So I'm going to wait and watch. This is my personal strategy. And when I have 2 consecutive days of upward movement, and when there are more positive news in the environment, the positive catalyst, that's when I will start investing. So that's my 2 bits for today's session. And I will leave you with that. So that's all I have for today. Please like, share, and subscribe. And thanks for all your support so far. I'm feeling motivated to continue with this channel. Please give your comments so that I can improve it and make it more to your liking. Bye for now.